Hi there, good afternoon. You're watching Closing Trades on ET Now with me, Sneha, and with me as always is Shrishti Sharma. Let's take a look at what the markets are doing right now. Last 1 hour of trade and no impact on the markets from the policy or the governor's commentary at all. We've once again slid to the session's low. A 0.4% cut is what we're seeing on the Nifty right now. 24,550 thereabouts is where we are at. Let's see if we're able to defend that mark in the next 1 hour. Sensex too lower in trade by about 0.3%, but it's actually the broader end of the market that is seeing much steep cuts coming in compared to the benchmarks today. So slight underperformance on that front. The mid cap space is lower by 1% and the small cap too is lagging in today's trading session. India VIX, a spike up of 2% is what we're seeing here. Nifty Bank is absolutely flat. The only sector that's doing well today is the entire PSU basket of stocks, PSU banks. That is, you have Union Bank, Canara Bank, all of these stocks are doing pretty well for themselves. From the Nifty 50 group of stocks, it's Asian Paints that's holding up smartly, followed by HDFC Life. Trent 0.8% higher, although we're expecting a muted set of numbers which should be out anytime soon. The stock continues to trade in the green before those earnings. BEL and SBI too marginally in the green. What's adding pressure to the Nifty today on the flip side is Wipro, IndusInd Bank, Sun Pharma, all of them trading with cuts of more than 2%, and Jio Financial, Hero Moto, Bajaj Finance. So Hero Moto too ahead of its earnings. A 1.7% cut is what we're seeing on the stock. While PSU banks continue to do well, it's actually the pharma space that's tanking even further. It's a 2% cut on pharma on the back of Trump's comments. You have realty, IT, FMCG, energy, auto, metal. All of them are in the red as we speak. So that's what the market texture is looking like right now. Let's welcome on board our guests for today afternoon. We have Sharan, who's joining us in the studio on the technicals, and we also have Deepan Mehta, director at Elixir Equities, joining us on the show. Deepan and Sharan, good afternoon to you. Deepan, let's come to you first. Give us your read-through of all the market action that we've seen so far. Almost a non-event from the policy, other than the CPI rejig in terms of estimates that we've seen. Largely no impact on the market. What's your read-through?
Yeah, good afternoon, and thank you for having me on your show. Yeah, I think it's a bit of a non-event, but that's perfectly fine. I think the RBI has been doing a great job in terms of inflation management and in terms of expectation management when it comes to the currency or the interest rate. So I think there are no concerns over there. I think what has spooked the market and what is hanging like a big sword is these Trump tariffs. And although many analysts and many experts have said that the impact will be minimal, some estimates say 0.3% of GDP, but still I think a lot of investors fear that it's not as simple as that. It's quite a complicated development because it's not just exports to US, but also affects the competitiveness of India exports to the rest of the world and its own competitive position as well. And it's a kind of a flux situation for a lot of exporters because, you know, he speaks about increasing tariffs from these levels as well. So we are in a very vast situation of uncertainty over here. And that I think is impacting the stock prices. Also, the earnings season has been pretty much okay. There have not been any great, earnings which have really surprised on the positive side. By and large, there have been more disappointments, and there is a certain element of stagnancy in earnings, which is also resulting to stagnancy in stock prices.
Well, absolutely not a win for the markets, be it RBI policy, but well, of course, that deadline for that 24 hours is still underway, and we will wait out for the final commentary coming in from Donald Trump. The markets are a little bit nervous, of course, but Sharan, what is your take on the benchmark indices? Because though we have been flip-flopping between that red and the green zone, but how do you see the index moving, and would you advise for a trader to literally take no positions overnight given the tariff overhang?
Yeah, definitely, Shrishti. I think Donald Trump is very consistent. He does what he says. If he's given a 24-hour deadline, so expect something coming on the tariff front, definitely 7 or 8 p.m. today. So Nifty again below that 100-day EMA, below that 24,600 mark. Now it's clearly evident it's heading to that 24,500, 24,450 levels where it has a strong support. It's the June low also. I think in the last 4 years, the June low has not been broken. If it has broken, the recovery has been swift and very fast on the upside. So we'll have to wait and watch today. So I expect some kind of negative outcome from the tariff news. Definitely you can expect some kind of gap down opening tomorrow. So if at all anyone wants to trade, do trade on the short side. On the long, on the index at least, I don't see any upside movement.
Okay, so that's the strategy going ahead, at least for the very near term. Given that we still have that tariff announcement uncertainty looming over our heads, and that 24-hour period that Trump was talking about might conclude by tonight. So let's see if we're getting any announcement on that front. But Deepan, let's once again focus and talk about some earnings. Bajaj Auto numbers came out a short while ago. What is your first take on the numbers? Because largely it looks like a good quarter for Bajaj Auto.
I think more or less it is in line, but I think the real surprising numbers in the two-wheeler came from TVS Motors and Eicher, especially Eicher. If you strip off the lower profits from the subsidiary which is engaged in commercial vehicles, I think the core two-wheeler business did very well. And I think even Hero MotoCorp also came with good set of numbers. So we are seeing definitely a better demand, better trends for the two-wheeler industry after many quarters. But as I said, I think more impressive were the results of TVS Motors and Eicher. And Bajaj Auto, of course, I think decent set of numbers in line, but there's an element of volatility in their earnings because of the large proportion of revenues coming from export markets. So I would prefer other stocks over Bajaj Auto, but nonetheless, I think for the time being, given that there is a upswing in the entire sector and the monsoon also will benefit all two-wheeler companies, I would remain invested. But from a fresh investment perspective, I think there are better alternatives.
All right, so within the auto pack, the top bet remains to be Eicher Motors as well as TVS Motors at this point in time. But along with that, Hero MotoCorp is also seeing some bit of a catch-up rally. But with this, viewers, it's now time to slip into a very short break. But before we do that, the MPC has kept the repo rate unchanged at 5.5%, maintaining a neutral stance. This follows a 100 basis point cut since February and comes ahead of the festive season. Let's listen in to what Sanjay Malhotra, RBI Governor, said.
After a detailed assessment of the evolving macroeconomic and financial developments and the outlook, the MPC voted unanimously to keep the policy repo rate under the Liquidity Adjustment Facility (LAF) unchanged at 5.5%. Consequently, the standing deposit facility rate shall remain unchanged at 5.25%, and the marginal standing facility rate and the bank rate at 5.75%. The MPC also decided to continue with the neutral stance. CPI inflation, however, is likely to edge up above 4% in Q4 of this year and beyond, as unfavorable base effects and demand-side factors from policy actions that we took a little while ago, a few months ago, come into play. Barring any major negative shock to input prices, core inflation is likely to remain moderately above 4% during the year. Weather-related shocks pose risks to inflation outlook. Considering all these factors, CPI inflation for the current year 2025-26 is now projected at 3.1%. This is down from 3.7% that we had earlier projected in June, with Q2 2.1%, Q3 at 3.1%, and Q4 at 4.4%.
Okay, this is what coming in from the RBI governor today. But while we were speaking about earnings, it's the press conference of Bharti Airtel that's currently underway, and that's Mr. Gopal Vittal, the MD of Bharti Airtel, speaking right now. Let's go across and listen to what he's saying.
Engine, which allows us to ingest data, monitor data, measure the data, catalog the data, and leverage over 3,000 attributes relating to every single customer. All of it automatically done with no human intervention. This data engine also has a next best action algorithm that provides the intelligence to all our channels on what action we need to take for that individual customer, whether to offer a service or solve a problem that they may have. The whole of the data engine is linked to a second layer, which we call our workflow platform, which really helps customers to do the 4 things that they want to do with us in any business. Buy something, we bill them for it, they pay for it, and we serve them. Finally, all of this is exposed in the third layer on our channels platform, to our customers across every single touch point. So whether it's the call center, it's the web, it's the app, it's the storefront, or it's at the home through our engineer, we have one unified presentation layer, which we call the channel layer. This entire stack has been built by our engineering group and is homegrown using open source software. It operates at a massive scale of 1.4 billion transactions per minute. All of this sits on our own cloud platform, which is managed and hosted in India. Our cloud handles over 250 petabytes of data, managing over 10,000 servers across our 14 large and 120 edge data centers. As you can see, all of this is at a mega scale. It's telco grade, and it's hosted in the country. I can also tell you that as a cloud for an individual company in this country, this is clearly the largest cloud instance.
Hi there, welcome back to Closing Trades. About 30 minutes or so left of today's trade, and the Nifty is not doing all that much. A little recovery from the day's low, but nothing significant. But above the 24,550 mark is where we are at right now for the Nifty. Let's also welcome on board Shrikant Chauhan, Senior VP of Technical Research at Kotak Securities. But Shrikant, before I come to you, I just want to throw some light on the kind of numbers that we have seen coming in from Britannia. They came in post-market yesterday, and the stock is taking a beating in today's trading session. A lot of it has to do with the kind of miss that we've seen on the PAT, EBITDA and EBITDA margins. This time their SAR, which is a part of the employee cost, that has inched up quite significantly, up 47% on a sequential basis, which is what has weighed on EBITDA this time around. But more importantly, it's important to notice that brokerages have maintained their as well as target price. At least the top 5 or 6 brokerages that we track closely have not made any revisions in Britannia's stance or target price. But it's actually a lot to do with the management commentary, and that's one of the reasons why the stock is falling, because they have said that they do not see wide fluctuations in commodity prices going ahead. While that is a positive, they're also saying that they do not see any more price revisions or price hikes going ahead for the company. While that is good from a consumption point of view, from the end user point of view, that's slightly weak coming in from the company perspective, and that's the reason why the stock is lower by 4.5% as we speak. And let's just once again revisit what the management had to say in terms of commodity outlook and pricing action, if at all.
I think from here on, we do not see the kind of wide fluctuations that we've seen on commodity, and we always perform much better in stable conditions. During the turbulence in commodity prices, like what we've seen in the last 2 years, it's always difficult to navigate price increases and estimate what it's going to lead to, etc., etc., etc. We have covered most of our inflation through our price increases. We are done with that, and we are in a good position.
Okay, so that's the word coming in from the management of Britannia, and of course muted first quarter is what we've seen. No eye on the volume figure yet, but the brokerages, Macquarie estimates this number to be at 4%. Nomura believes that this could be a 2% year-on-year growth for volumes. So lots of discrepancy over there. But Deepan, what are you making of Britannia's numbers? And not only Britannia, if you throw the light on the entire FMCG pack, mostly it's been either good or inline set of numbers coming in. Any signs of a recovery in terms of demand now?
I wouldn't call these numbers good by any stretch of imagination. A good number is something where you have 15-17% type of top line, bottom line growth. And I don't think any of the MNC or the domestic FMCG companies have delivered those kind of numbers. I think there's a structural and secular stagnation in the entire industry because a lot of products and a lot of the categories have become mature. And now their growth is in line with low single-digit growth, which is in line with the population growth. It's growing as an industry, it is growing much, much lower than the GDP growth rates also. So from an investor's perspective, the entire sector is a complete avoid. There could be a few outliers, companies which are still doing well, like say Varun Beverages comes to mind. Maybe some of the snacking companies like Bikaji, or some of the other food companies. But by and large, I think the likes of Britannia, HUL, Nestle, Godrej Consumer, Colgate, they all, I think, have to be avoided, and investors may find it painful to sell. But if you want a portfolio to outperform going forward, you have to be zero weight all these traditional FMCG companies.
Right, so have zero weightage on all the traditional FMCG companies, not backed by strong growth number is what Deepan is highlighting. But along with that, we also have Shrikant Chauhan with us. And Shrikant, hi, good afternoon and good to be speaking with you. And firstly, what's your take on the markets and any sector that is popping up on your screen? Because yes, of course, a lot of sector churning underway. We are seeing select life insurance counters, select PSU counters. They are doing well. What's your analysis?
Yeah, good afternoon, everyone. I think, see, like since last 3-4 days, if we consider any specific activity in any specific sector, then I think this FMCG and auto companies, they are doing well. But the broader market is not that strong. The breadth of the market is very poor. It is finding difficulties to sustain at higher levels, and whenever there is a negative news flow, we are seeing deep in the market. So I am of the view that as far as the Nifty is trading above the levels of 24,450, we can see some rebound in the market because markets are deeply oversold. But in case market breaks the level of 24,450, then in that case, we can expect some capitulation sort of activity in the market, because then a lot of selling will happen, a lot of stop losses will get triggered. And in that case, we can even see the levels of 24,150. But in the near term, till the market is holding above this 24,450, we can again see the levels of 24,800 on the higher side. So for the time being, we are expecting market to remain in a range. For Bank Nifty, there we are seeing consistent weakness. It is not holding at any important level. And even if we consider FI's activity, then they are consistently selling into the market. So that's the reason Bank Nifty is also avoidable at this level. It is down already, close to 55,000 levels. It has very good support. But at this level, it is better to stay away from taking any specific position on Bank Nifty. Better try to focus more on Nifty 50 stocks and Nifty index.
Okay, so that's the strategy on the benchmarks. But Sharan, while we are talking about banks, the PSU bank space, and you've been positive on this space, is the only space that has been in the green in today's trading session for whatever reason on the back of policy. But on the charts, how are some of these stocks shaping up from the PSU banks, and which ones are you liking from this basket?
So, Sneha, I think Canara Bank is looking quite decent. It's seen a good reversal of the 100-day EMA. I think it's one of my picks, also a BTST pick today. So if anyone wants to go long, I think Canara Bank is a good BTST. Go long around 109 rupees. That's the price currently, with a stop loss of 106 rupees, just 3 rupees, with a target of 112 to 115. Please do not trade without a stop loss. In the next 24 hours, anything can happen. Your tariffs can go to 50%, 100%, I don't know what. So if at all, stay light. Canara Bank is looking very good from the PSU pack.
Canara Bank is looking good at this point in time. That's the call coming in from Sharan. But Deepan, maybe tomorrow when the markets open, we will have the tariff rate announcement by Donald Trump. At this point in time, Deepan, a lot of uncertainty is there, and investors are of course nervous regarding that. But what, as per you, will be the best strategy to adopt at this point in time? How do you rather suggest to make the sector churning, or rather make some adjustments to your portfolio, because you were just highlighting that it's maybe a time to avoid some of those export related plays? So if you wish to highlight some particular pockets where investors can, going ahead, look to cut the exposure.
That's right. I think, as I said, FMCG is one sector where investors can look to cut exposure. And then now pharmaceuticals also, if there's an announcement of any customs duty over there, that's going to impact the demand, the pricing, because I think US consumers, US buyers will insist on part of the customs duty to be borne by the Indian companies. So that's also a bit of a challenge. I was quite disappointed with the banking sector numbers, excluding the PSU banks. So I think there are fewer and fewer sectors who are coming out as winners post this earnings season. So let's just wait and watch. I think software also was very disappointing. Large cap software companies, again, are in a structural slowdown mode. So it's getting quite challenging to be an investor in times like this. And the good quality companies, say the capital goods companies or the telecom companies, like we saw with Larsen and Toubro, or for that matter, Bharti Airtel, they are trading at very rich valuations. So I think time has come for investors to be extremely selective and just wait and watch. I think this Trump tariff, let it just settle down, I think, before one could look at doing a massive reshuffle of the portfolio. But by and large, I think more sectors investors need to be underweight at this point of time than maybe a few months ago.
Okay, Deepan, appreciate your thoughts. And of course, well, indeed, it's a difficult and tricky time to be an investor. And Deepan, next time when we interact, we may have a new set of tariffs. So lots to talk about next time with you as well. But thanks for your time today. Well, let's move on from that and once again to focus to the technicals, and let's get some BTST ideas from our experts. And Shrikant, what about you? Where are you placing some BTST, or perhaps in the market like this, some STBT ideas? Shrikant, could you unmute yourself, please?
Sure.
Thank you. Yeah.
So to act with a very short-term view, Godrej Agrovet looks good. Currently, it is around 815, 814 sort of levels. The company is going to announce its quarterly number. But if we consider its technical pattern, then it is holding comfortably above the levels of 810, which is something positive. And we can expect 835 sort of levels on the higher side. We can keep a stop loss around 804 for the same. So that one we like. We also like a few FMCG companies, but currently the market is under a lot of pressure. So it is better to create some balanced strategy and look for creating some short position on technology companies, because there we are seeing good amount of hammering. HCL Tech looks weak. Currently it is around 1464, 1465. From here, the stock can fall to the levels of 1420, and we can keep a stop loss at 1480 for creating any short position on HCL Technologies.
All right, so that's one buy, one sell call coming in from Shrikant. But what about you, Sharan? You gave a buy call on Canara Bank. Any other stock making to your list?
So there's one more sell call. I think Crompton Greaves is looking very weak on the charts. I think it's trading below all its moving averages. And I think it's on the verge of a big breakdown. So if at all anyone can do a STBT trade, short Crompton Greaves August future around 320. Target should be 312 to 304. Your stop loss should be 328 on the system. Again, trade light, don't add too many position. Anything can happen in the next 24 hours. So please do keep a strict stop loss in the system.
Okay, so that's a sell call coming in on Crompton Greaves. That's the take on this stock by Sharan. But let's also welcome on board Mr. Sunil Subramaniam, who's a market expert, to get a little better idea on how should one navigate the turmoil that we're seeing in the market and the kind of uncertainty that comes almost every day with fresh set of comments coming in from Donald Trump. And Sunil sir, that's exactly my first question to you. Hi, good afternoon and welcome to the show. How does an investor, or how do our viewers try and navigate the uncertainty that comes with the comments that we're seeing, and now that we're seeing an extra tariff overhang of 250% on pharma? We're also being threatened by extra tariffs on India overall as well. How do our viewers navigate these uncertainties in the market at present?
So first thing, I think as a viewer, you need to decide your own risk profile, right? What's your ability to handle the volatility, which is a given in these times, thanks to Mr. Trump's tweets and the overall uncertainty, right? So if you are a risk-taking investor, you can actually look at this and say that if we are going to be suffering a higher tariff than 25 because of the oil, and let's say it goes to 30, right? And then the second aspect of it is that pharma and all, it goes up very high over a period of time. But the key point here is that a lot of the correction is in the price, a lot. I'm not saying that it's done. There's still more correction, but the reason for the correction is because FIIs have been staying away. So I think what you need to correlate is that FIIs have been staying away from all the external oriented sectors in the economy, thanks to the Trump tariff related uncertainty. So there's been a market price correction in those relative sectors. So pharma, IT, those kind of sectors. So now when you look at it, if you're a risk taker, you have to say that ultimately, when these tariffs happen, it's not like India is defenseless, right? Like I said, we can, first thing is use currency depreciation as a tool to counter some of the tariff. Second is you'll see government also giving a lot of productivity related incentives to improve the productivity in order to compete. Third is we'll hunt for a larger share in other markets like maybe a EU, the rest of Asia, of that. So it's not like today there's a lot of the bad news in the price, but definitely if your risk appetite is not aggressive, you should stay away from the external oriented sectors, right? Then you obviously have to Trump proof your portfolio, and to that extent, right, you look at the domestic side, which is not so affected by the thing. And mind you, domestic fund managers last 3 months have bought 2 lakh crores worth of equities. I think average about 60 to 65,000 per month. So clearly they have been buying a lot of the stuff that the SI was selling. And so the FIIs, what they've been selling, like I said, a passive FII will sell both your domestics as well as your externals because they are selling the index. So, and domestics have been going and buying these domestic sectors. So what's happened is that the domestic oriented sectors haven't fallen as much as the external oriented sector. So already there is an element of safety being built, and that will continue to be so because I don't see domestic fund managers taking a big risk on externals right now. They will also prefer. And so the developing earnings season is a key trigger for the fund managers. So from that point of view, if you're a moderate risk investor and you're then looking to domestic oriented, I would say consumption, banking and financial services are the spaces, and capital goods with a slightly longer attitude is the spaces you should be in. But I would still recommend that you stick with a mutual fund manager rather than try and pick stocks at this point of time, because like I said, domestic funds have been buying the good stocks and their prices are already way up. So to that extent, it's very hard for a retail investor to go and say, okay, within the domestic pack, this stock looks good or that good because the earnings season is still underway. It's not completely done. So I would say choosing multi-cap funds and multi-asset funds, because let's bear in mind the other thing which is on the anvil is a Fed rate cut, because I think that the NFP data which has come out in the US, coupled with the fact that Mr. Trump is putting a lot of pressure to get his people into the Fed Monetary Committee, I would say the odds of a rate cut in the US have gone up. To that extent, that's a positive for equities in the emerging markets, and some amount of FI flows may start to come back. So one has to have a balanced approach here. Obviously, you don't dabble too much into the tariff impacted sectors if you don't have the appetite for the risk. So I think that's the way to look at it. But if you saw from the RBI's policy today, the economy numbers look good, inflation looks good. So overall, the prognosis for the economy is fairly decent. And RBI, despite the Trump uncertainty on the tariffs, hasn't downgraded India's growth rate yet. It's still holding it at 6.5% for the current year. So obviously they have extensive access to data. So the fact that India's exports are only 2% of our GDP, right, means that our external orientation as an economy as a whole is relatively less compared to a lot of our competitors. So I think we should stick with our domestic economy's outlook, and the RBI's rate pause. In fact, it's a good sign. They see that there is no worry in terms of trying to give an extra booster of a rate cut to boost the economy. They seem fairly confident about the economy. So stay confident about the domestic economy and put your portfolio around there if you're of a moderate risk appetite.
All right, so that's the advice coming in for all the investors out there. But time now to slip into a very short break. But before we do that, it's SEBI chairperson who has dismissed the reports of weekly expiry curves, says all their discussions have been shared with the market participants. Let's go across and listen in.
I'm not aware of any such communication. I think, Harsh, you have been running some story. I think it's your own speculative thing. And what we have been saying is quite out in the open. Whenever we do anything with respect to anything, I've said it before that we need some reforms, but what will be the nature of those reforms and how it will be treated? As per our practice, we always discuss with the markets. We always put out consultation papers. As in the past, we have also made changes, as you know, in options trading and futures market, in terms of limits, in terms of structure. And this will be and we have also put out the data with regard to that. So in future also, whenever any such concrete measures that we will envisage, we'll certainly inform the market and will come out in the open for consultations.
Welcome back to Closing Trades right here on ET Now. And yes, it will be the MSCI rejig that will be announced this particular week. But Paytm, which was a strong inclusion candidate, could miss the criteria and be included in the next cycle in November. Rabinder joins in to tell us which are the other stocks to watch out for. Rabinder.
Well, as upcoming MSCI Standard Index rejig is scheduled to be announced on August 8, and as per Nuvama Alternative Desk, Paytm, which had initially qualified for the inclusion during the early part of the review period, is now expected to miss the August rejig cut due to timing around the cutoff period, and which likely pushes Paytm inclusion to November 2025 rejig. And if it is included in the next cycle, then the Paytm could attract an estimated inflow of USD 270 million. And if we talk about stocks that are included in the MSCI index, August 2025 index, and the 4 stocks are expected to be included in the MSCI index, where Sugi inflow is expected at USD 285 million, and along with other 3 stocks, total inflow is expected at USD 1029 million, and 2 stocks are likely to be excluded from the MSCI index with total outflow of USD 340 million dollar. And if we talk about small cap index MSCI rejig, then the small cap index could see 12 inclusion and 4 exit from the August 2025 rejig, and the likely inclusion CSB Bank along with 11 other stocks. CSB Bank total inflow is expected at USD 4 million, and total for all 12 stocks are expected at USD 65 million. And lastly, if we talk about stock to be excluded from the MSCI small cap index, then the Bharat Dynamic along with 3 other stocks are expected to be excluded from the MSCI small cap index, and the BDL along with outflow is expected at USD 29 million dollar, and the total outflow for the all 4 are expected at USD 36 million dollar.
Okay, Rabinder, thanks for taking us through all of those details. All eyes are going to be on August 26-27 when this announcement and the rejig it actually comes into effect. But Srikanth, my colleague Rabinder was just highlighting one stock that may or may not make it to the MSCI index this time around based on the criteria, and that's Paytm. Now, if you take a look at Paytm only on the charts, the kind of run up that Paytm has seen in the last 6 months itself, it's up higher by 30%. Year to date also, it's been quite steady. What's your take on the charts for Paytm, and given the kind of up move we've seen, is there any more headroom to grow?
Yeah, if we go through with its technical pattern, then the stock is showing lot of strength. It is right now into some corrective pattern, but broadly the way the stock moved from the levels of 840 to almost 1120, 1130. One thing is very clear that the stock is into strong uptrend, and whenever there is a correction in the stock or in the market, we should look for adding this stock with a positional view. I think the stock has already corrected from the highs, and currently even at this level 1050, 1060, it looks very strong candidate to buy for. I am of the view that the stock is heading for the levels of at least 1400, 1450, which will take some time. I mean to say few weeks or few months, but eventually the stock is heading for 1400 sort of level. So definitely it's a buy at current levels and more on dips.
Coming in on Paytm, let's watch out for that. A very strong move of late is what we have seen in this particular stock. But Sunil, what's your overall take on the paint sector rather? Because of late, it's Asian Paints, interestingly, that has been moving higher. And today, of course, we were talking with the management of Berger Paints, and they are quite optimistic about the demand outlook going ahead. Do you believe that after so much of news flow regarding the competition increasing in, once again to look out for those traditional players in the paint sector?
I think the correction was a bit overdone because they're all good quality companies. And I think only thing is that with the monsoon going on, generally construction activity slows down during the monsoon. So I think the immediate quarters numbers in terms of the houses and all, right, that's where the painting demand comes from. So I think that could be see a quarter of slowing down. But later, as we see now, private capex picking up, then there's a lot of industrial paints which get used in it. And I think that it's a good time to enter the paints stocks because, as you said, the run-up has started now. And as the outlook for I would say rate sensitive itself should improve. I know today the lack of a rate cut has impacted them overall, real estate and other rate sensitive. But I would still retain a positive outlook on that, and hence paints which are, in a way, if you look at it, a part of the building materials, part of the high-end retail, so they fit into multiple sectoral fits. So I would say yes, that, and they are fairly domestic oriented. And one of the key things from an EPS growth for them is the softening in crude prices, because crude related derivatives are a key raw material for the paints industry. So that's another positive signal from a margins perspective.
Okay, so that's the take on paints. But Sunil sir, what are you making about the entire big box retail group of stocks? Like you have DMart, Trent numbers are expected, in fact, any minute now. And DMart, in terms of the store edition commentary, was strong, and Trent, we're not expecting too much of positivity right now for at least the quarter gone by. What's your reading on how the big box retail stores are faring against the heightened competition that we're seeing from modern trade and quick commerce?
I think everybody should benefit from this. Given that we are in a festival season now, I think that the level of advertising and marketing that all of these firms will do. So definitely, I would say that there will be a lot of pressure. And as we have been saying, right, that in the consumer discretionary space, right, the lending hasn't yet picked up despite the giveaways by the government through the fiscal policy in the budget, as well as the RBI rate cut. But that transmission, right, I think with the CRR cut also coming in, there should be adequate liquidity there. I see that interest rates will definitely soften at the marketplace. And so all of the retail sector, the consumption sector, I would say would benefit. And so the increased competition will only lead to an expansion of the market. And I think that with a good monsoon, the rural side of consumption demand should be holding strong. We are already seeing that in the two-wheeler demand picking up. So overall, I retain very positive on the overall consumption space. And I would say right across, right from high-end retail through consumer durables to auto and to realty, I would say that this is a good space, and all of these players, right, I think all of them will benefit from the increased interest during a festive season, plus the rate cuts, plus transmission happening. So I think it's a good time that we are entering into for this space.
So that's the take on retail. Let's throw some light on earnings on the Nifty pack that we're expecting. Of course, Hero Moto and Trent will be out today, but tomorrow, one Nifty company will be coming out with its earnings, and that's Titan. Now, remember when the company came out with its quarter one update about a month or so ago, it was a mixed set of update, not too bad, but nothing that stood out particularly for us other than the other segments than jewelry like eye care and watches that are expected to do well this time around. So if you take a look at the standalone year-on-year numbers that we're expecting, it's a decent quarter that we're expecting for Titan, wherein revenue is seen at 13,964 crores, which is up 16% year on year. EBITDA also we're expecting a growth of 22%. Net profit we're expecting it to go up by a healthy 20% at 925 crores compared to 770 crores. And in fact, very surprisingly, this time around, based on our estimates at ET now, we're expecting the margins to also inch up higher slightly. In terms of their updates given, they're saying that jewelry has managed to grow 18%, so that ex-bullion number, based on the kind of upswing that we've seen in gold prices recently, that is going to be important to watch out for. Watches have grown 23%, eye care according to their update is up 12%, and emerging business up 36%, with strong growth coming in on the international business up 49%. Shrikant, any reading of Titan on the charts, and what is the stock price telling you at present?
Yeah, for Titan also, we are of the view that it is currently into pullback mode. We saw a deep sell-off in the stock some few days back when the company has announced its quarterly update. But if we consider its technical pattern, then it is indicating us that it is into pullback, and max we can see the levels of 3,500 on the high side. So we need to be a little bit careful if there is any upward activity in the near term. I think at higher levels, we can again see profit taking or liquidation of long positions. It is better if we try to buy this stock somewhere close to 3,300 or 3,200 sort of levels, instead of buying at current levels, or in case if there is any bounce back.
Yes, post-market, we will also have the numbers trickling in for Hero MotoCorp as well. This time, the margins is expected to be steady. Well, all eyes will be on the management commentary with respect to their EV performance specifically, because of late, it was the EV that was really an exciting point where the company has managed to claw into that, or rather get into that double-digit market share for itself. Sharan, just wanted to have a quick chart check by you. How do you see Hero MotoCorp on the charts?
Shishti, on the charts, it's looking very good. It had given a breakout of on 4th August of around 4450 odd levels. Now it is retesting that levels. And I think looking at the numbers month on month, Y on Y, their sales have been pretty good. So you can expect a decent set of results. Again, on the charts, it's looking very good. And I think you can easily see higher levels around 4600 to even 4700. So the stock has become a buy on dips kind of stock. If at all you get it at around 4400, 4450 kind of levels, do accumulate it. I think the trend has changed from a sideways consolidation to an upside movement. So at all, if it can break that 4550 mark in the next 2-3 trading sessions, you can easily see levels of 4700 and even 4800.
That's the take coming in on Hero MotoCorp. Let's watch out for that. But just a few minutes before we should shop. And today, of course, has been a decent day for the markets because post the policy as well, we have seen rather positive moves on the banking index specifically, while even Nifty 50 has managed to move up from that day's lowest point for itself. Stocks like Asian Paints, select life insurance counters, they have been doing very well. And Trent, of course, in the past 4 days, if you track the move, the stock is already up more than 6%. BEL, of course, was also one of the other counters that was doing very well, given the fact that DAC has approved like 67,000 crores of new acquisitions to be done for the defense pack. And select PSU banking space stocks were also buzzing. What's not doing well was actually the IT pack that was reeling under pressure. And Sunil, just a quick take on IT before we wind down today's trading session. Clear time to avoid the IT space right now?
I'm not sure. I'm a contra buyer in IT. So I think that a lot of bad news is in the price. And it's both the AI related stuff as well as the US economy related stuff. But I would say that you should expect 80 and IT companies to adapt to the new normal and come out. And I would say that I'm seeing that in the mid and small cap IT companies who are adapting faster. The larger ones will take time. But I think a lot of the so-called bad news is in the price today. So I would be a buyer on dips on IT with a medium-term view, of course. In the short term, continue to expect volatility in those prices.
All right, so that's the take coming in on the IT pack. But with this, thank you so much, Sunil, Sharan, as well as Srikanth, for taking the time out and speaking with us this afternoon. But yes, with this, let me hand over to Ashesha, who is standing by to tell us that how did the market pan out in today's trading session. Ashesha.
Well, yes, another tepid day on the Wall Street. Nifty is ending nearly 72 points lower for the day, near that 24,580 mark. Nifty Bank, though, was outperforming in trade today. We should have that up on the screen. Nifty Bank ending nearly 95 points higher for the day, near that 55,451 mark. In terms of individual stocks, we had Wipro. That one was down 2.5%, the biggest loser on the Nifty 50 index, followed by Jio Financial. That one is down 2%. Sun Pharma is also ending the day with a downtick of nearly 2% in trade today. On the gaining side, though, we have Asian Paints up 2%. HDFC Life and Trent are also ending the day higher in trade. Remember, Trent will be reporting its numbers tomorrow, so keep an eye out on this counter as well. Shifting focus to individual sectors then, Nifty Pharma Index was impacted the most in trade today after US President Donald Trump again reiterated yesterday that he will impose additional substantial tariffs on India. Dr. Reddy's down 1.5%. Dr. Reddy's, of course, reported its numbers during the day. Weak set of numbers coming in. Sun Pharma down 2.5%. Lupin was under pressure. Biocon, Ajanta Pharma, all of these stocks ending with cuts of nearly 3% in trade today. On the flip side, though, we had PSU banking stocks which were gaining in trade today. This was the only sectoral index which is ending with some amount of gains. We have PSU banking index up 0.6%, Union Bank, Canara Bank, Bank of India, all of them gaining anywhere between 1 to 2.5% in today's trade. In terms of individual stocks, we have Britannia. After
the management commentary that came in from the con call, the stock ended nearly 4% lower for the day, where they say that market share continues to remain flattish and the company is experiencing high commodity inflation. So after that commentary, the stock is ending with a cut of nearly 4.5% today. Bharat Forge, weak set of numbers. Revenues have declined 5% YOY. Margins at 17.2%. Bharat Forge is ending nearly 2.2% lower for the day. PVR, that one also reported its numbers. Godrej Agrovet, good set of numbers coming in over here, where revenues have risen 11% and we have EBITDA margin at 10.3%. That one is ending at 825, 2% higher for Godrej Agrovet in trade today. Castrol India, meanwhile, some management commentary that came in, after which the stock tanked in trade. In fact, Castrol India is also ending the day with a cut of nearly 4% today, where the management says that they continue to face macroeconomic challenges. So a whole host of individual stocks based on earnings that were buzzing in trade, but on the index level, Nifty is ending nearly 80 points lower, near that 24,570 mark. Bank Nifty, of course, is ending the day with some amount of gains. But that's all the time we have on this edition of the show. But don't go anywhere. More news and updates will continue on the other side.